Starfleet battles.
What is going on?
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded June 9th, 2017. It is the Money Path Podcast with Bob Iacchino and Michael Arnold, founders of Path Trading Partners. Today's What and Why segment is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation on the markets.
Okay, got a follow-up on silver, which we've talked about. It triggered a trendline trade, did reach the full first target this week. We're looking for 1768. We did update this also in our Path chats. So if you're not a subscriber to that, subscribe to our YouTube channel at Path Trading Partners to get updates on some of the things we call out in the podcast. But the first target was 1768. It reached a high of 1774. So that was target reached, and then it would, if you didn't take it all off there, it would have been, the remainder would have been stopped out at break even or better, because you never let, once it reaches its first target, we don't let a winner turn into a loser. We also have to talk about Shake Shack, I think. Let me take a look at Shack.
Shack was up like 3% yesterday.
How's the Shack doing?
Shack was up like 3% yesterday.
The Shack is continue the early entry on the horizontal channel. So continuing up, our next target area for anybody long Shack, or if you want to, it'll hit some resistance around here, but the next target area is 4071, and then the target after that, next target on Shack, 4199. So I'd say about 4188 is the next target before then if we get above that, we have the official horizontal channel breakout. But if you're looking to take some profits and enter on pullbacks, because this might be tradable for a while, that's what we're watching for on Shack, but it is moving higher. And Qualcomm, which we'll be touching on later in the show again, we're watching for, based off the most recent chart, close above 59.04. Right now it's trading 58.22. It's got to close above that on a weekly basis. It did pull nicely down, catching on the rising 8, which we're looking for a first cross rotation zone, which would also give us an ice cream trade. And there's a potential trend line trade on there. So we have multiple different trades. Doesn't mean they're all going to be winners, but there's multiple different trades on Qualcomm that we're still waiting for a trigger on the confirmed double bottom. All right, I got to go on some rants.
Go.
I'm getting very concerned.
About?
All right, so I was at a get-together the other evening, talking to a lot of people who, they know what we do and everything, and it's really starting to sound like 99, 2000 again. People are bringing up, multiple people brought this up. They brought up the FANG stocks, and other people are bringing up, no, it's not FANG anymore. It's FANGD. It's Facebook. Well, the original FANG. What was the original FANG, Bob?
Facebook, Apple, Netflix, Google.
Wasn't it Amazon?
I'm sorry. Was it Amazon? Yeah, well, you're right. It was Amazon. I apologize. I make that mistake all the time.
So Facebook, Amazon, Netflix, Google, original FANGs. And they've been sort of propelling the market higher. Well, now it's, you alluded to something as Facebook, Amazon, Apple, Netflix, NVIDIA, Google, or Alphabet, and Tesla. Here's the strategy. People have been dumping their dividend stuff and everything else. They're pretty much, and I got this from multiple people, every dip, We buy Facebook, Apple, Amazon, Netflix, Nvidia, Google, and especially Tesla, because they're all going higher. And then we round it out with, guess what?
What?
The QQQ.
Huh.
Every dip, you just buy it.
Can I be honest? I'm trying to find a problem with that strategy.
Well,
Tesla's the problem with that strategy.
no, actually, it's you don't. There's no other thought given. You just buy it. And I said, "Well, did you take profits?" No, we just buy more. We just well, it's now we found a way to the brokerage firm we were at. I guess you could get reclassified. Now they were at margin leverage, which is you're trading at 2-to-1. Now they're trading at 4-to-1. This stuff.
There's the problem.
And it's buy every dip. It's not a strategy. And I said, all right, well, where are these things going? Well, Tesla's going at least to 500.
Like zero.
Amazon's going to 1,500.
Possible.
It is, but we're just going really quickly to 1,500.
It's not going.
Sounding like the people I worked with back in 99, 2000, and I remember it. One guy's. Won't give out his last name. Named Joe. We'll call him Joe.
Joe
Used to do this in Red Hat. Every Red Hat software, every dip, wrote it up to like 280. Turned his $10,000 account by buying every dip and trading in and out. He turned it into 100 and something thousand. And then when everything crapped out, he ended up with the account being shut down with margin calls. Because it was buy every dip, and so he kept buying the dips when it turned, he bought every dip. But here's my other problem with when you put the Qs on top of it, you're putting because the Qs are cap weighted, it's not an equal weight, and a lot of the Qs are being driven by these same FANG stocks. So you're actually what you're trading on leverage, you're putting all your eggs in a very narrow basket.
Yeah. Okay. So I'm not even sure how much I want to go into this because I don't want to encourage it. Just to me, it's like the issue with that is the leverage. 4 times 1 and the NASDAQ on top of it. I have no problem with people who want to buy and hold all the stocks just mentioned. No problem with that at all.
I might
on Tesla.
Out of that.
Well, Tesla would be the one that wipes the whole portfolio down to half. But the leverage is the issue, and the layering the NASDAQ on top of that is the issue, because this is all reward seek with no consideration to risk at all. That 4-to-1 leverage plus the QQQs is idiotic.
And no, they're not trading with targets. They're not trading with stops. They're just it's just going to keep going forever.
It's just, so you're saying they're trading, they're not buying and holding.
No.
So, but if they're never taking profits, aren't they buying and holding?
Well, they're taking something off occasionally, but then they're just taking it off to re-add it on the dip, which the problem with this is if you get over-levered and then you keep buying every dip and it stops the rally. Let's say we have an extended pullback.
Exactly.
What happens? And you have no idea if you're stopping out. What are you doing? There's no strategy. It's going to keep going.
And that's why the leverage is the problem. The leverage is the problem. If you're buying it with cash you have on hand, that's fine. To me, if you're doing that strategy with cash on hand, no problem. If you're doing that with leverage, what's the point of layering the NASDAQ on there? It's just return enhancement. It's also risk enhancement.
They didn't even realize that again, this is the ignorance of these stocks are really driving the NASDAQ higher, and then they didn't realize that just layering on the NASDAQ was actually putting more essentially into these stocks.
It cracks me up when they say stuff like it's going there quickly. That, like Amazon, for example, made a high of $847 and change in the first month in October. I don't know which week it was. It was sometime in October. 7 months later, it added $150. 7 months later. So these people, right now Amazon is at $1,009. They're saying it's going to go up $491 fast. It added $150 in 7 months. It took
just
7
going to
months
keep going.
to 50.
Well,
7 months.
It's up 8 weeks in a row.
We've never even had a monthly close above 1,000. I mean, We haven't had that yet.
Well, Alphabet
we are early in June.
Alphabet, everybody's shooting for Alphabet above 1,000 now. So it's trading. The high this week was 988.25, but it's 1, 2, 3, 4, 5, 6, 7, 8 weeks straight up. Also, people aren't prepared, and if it like any down day, just buy more.
Boy, once, it's funny. I'm sorry to go back onto this, but this is where we have value to people who listen to this podcast. If you want to buy and hold the stocks just mentioned, I would take Tesla out of it. So would Mike. If you want to buy and hold the stocks just mentioned with cash on hand and look at them 20 years from now, that's fine. And to some degree, these people are saying they don't take profits, they just reinvest. And that's not the problem either. The problem is the leverage and the layering. You're at 4-to-1. So one of these days, we should do the math for people. We're not going to do it this morning, but do the math for people and show what type of a pullback it would take.
What if you got a 25% pullback?
Yeah, you'd have an unaffordable margin call because you're
25%. If we get a 25% pullback, which is possible,
every 8 years the S&P pulls back like 40%.
Yeah, if you have NASDAQ pull back 25, a lot of these momentum. See, what was concerning me is also that people are they're dumping value, they're dumping dividend now, and they're just going all in on growth. Well, it's not a diversified portfolio, and if momentum stalls or we have a pullback, these momentum things are going to go the other way for a period of time.
A guy I know asked me the other day, he goes, I want to open a stock account for my kids. I said, how old are your kids? 2 and 4. It's okay, what do you want to do? He goes, well, I want it to pay for their college. I said, okay, 40% growth, 60% tech, cheapest ETFs by Vanguard and Fidelity. They got $2,500, $3,000 minimums. Put in the first bunch, put in $50 a week, check it in 20 years. That's it. It's just that simple. They're 2 and 4 years old. But you're talking about adults here at 4-to-1 leverage with such a limited scope. That's insanity.
Yeah, that's what's scaring me. That's why I said it was sounding like the tech bubble again with let's just do this. Let's just do it.
Mm-hmm.
Oh, and then we'll get to this in the cryptocurrency, which I'm
glad you know them so well because you can go give them soup when they're homeless. Go ahead.
It reminds me of somebody else I knew who in 2007, second line, a home equity to go all in on stocks. In 2002, and then we know what happened to the housing and stocks, and you want to talk about a double whammy.
Mm-hmm.
It's just this scares me, and the chart of Tesla sort of scares me too. Have you seen it this week?
I didn't look at it this week, no.
Take a look at it.
Hold on, let me look at it.
I love this. I'm not saying it can't go higher. It's just getting to that. Wow.
Why does Tesla remind me of rollerblades? Oh, geez.
In other wonderful news.
Did Elon tweet? What's that all about?
Oh, we'll get to Elon.
All right, we'll wait for Elon Corner.
We'll get some stuff in Elon. That was just a preview. Some other corporate and stock market news. The Supreme Court rules in favor of time limits on SEC enforcement actions. So they said that the Securities Exchange Commission is subject to time limits when requiring financial firms or individuals to forfeit ill-gotten gains from fraudulent conduct.
What does that mean?
It means there's a period of time, like let's say they determine you 10 years later, when they finally have proven everything, you made $100 million from fraud. Well, the time limit to go back and claw back money and everything is run out. So you
can't get it?
Yeah.
So all they got to do is they just have to.
Because you know how long it takes SEC sometimes to build these gates. Look, even after Bernie Madoff, I mean.
So if you hide it well enough, you're good?
Yeah.
Wow.
Yeah.
I just.
It has to be within 5 years now. So if you don't have everything wrapped up within 5 years, you can't claw back the ill-gotten gains. Well, you know how long these SEC cases go.
Yeah, I guess that's what it is, trying to clean off their desks. I don't know. I mean, if there's a conviction, it should be forever.
Yep.
If there's a conviction of somebody, you should have their entire lives to claw back that money.
You got 5 years.
Wow. That's disappointing.
That was very interesting. I think we don't. I'd actually like to give the SEC sometimes a little more teeth than less teeth, because I'd like to get rid of.
Surprised, but I need to read that.
It was in I believe it was in the Wall Street Journal on Monday.
Yeah, I'd like to actually read who wrote the opinion. Was it Sotomayor that wrote it?
Yes.
I got to read the whole opinion. I don't understand the reasoning. Maybe there's reasoning. I don't know.
Yeah, there's reasoning. I'm just saying, I don't know. Just wanted to bring that up. Thought it was interesting. Today's news coming out, credit card default surged most since financial crisis. We've talked about this. We talked about this a couple months ago. Remember, you said, well, it's not a trend yet?
Yeah.
And it's starting to turn into a trend.
It could be.
So look at the chart there.
Got a breakout.
Yeah, we got a breakout of a horizontal channel.
We do.
So that's just, notice that the default rate on U.S. credit cards has jumped 3.31%, an increase of 13% from a year ago, and the highest default rate since June 2013. And when back in June 2013, it was headed down. Now it's headed up back in that same area. So this is something we have to keep watching.
Yeah.
Because it could be like one of the canaries in the coal mine.
May not hurt stocks other than Visa, MasterCard.
At this point, well, anything.
I spent a lot of time thinking about this week, and reading a lot of stuff and watching a lot of stuff in my spare time, of which I don't have much. But I just, the only thing to me in the short to medium term, and I mean maybe say a year and a half, 18 months, that can really hurt stocks is an over-aggressive Fed, because there's just no sign of inflation that I see. So how do stocks end up being overvalued with no inflation? I don't know. We could talk about that more later.
Back to FANG, we have Netflix. Now, according to a report on sportsfacts.org, Netflix is spending so much money on their shows and movies that they'll soon have the biggest budget in television. They're looking to pass ESPN, which commits about $7 billion each year, with all their rights to MLB, Monday Night Football, and the sports stuff they do. But Netflix seems to be catching up. In 2017, Netflix will spend over $6 billion on content, and then they're looking to be at $8 billion by 2020.
Wow.
That is a lot of money. They'll be their own programming. I still like their cash burn.
I definitely have a hard time finding things that I want on these anymore. And then when I find something, like I believe it's Amazon has a really good series called Patriot that I enjoyed. I watch them all in like 2 nights, and then I'm done. I'm bored again. It's annoying.
I thought you didn't have much free time.
Well, at night I do because I'm an insomniac.
Well, you should probably hop over to Snapchat then.
No.
Why not? You should be Snapchat. Oh, I haven't looked at Snapchat this week. Would you look at Snapchat? Look at it on a weekly.
On a weekly.
Look at it with the rotation zones headed down. Look at these. Look at our rotation zone concept.
That is ugly.
Yeah, well, Snapchat back then, 1810. Just was reading this morning, Snapchat downloads are dropping off a cliff. Snapchat's growth has slowed sharply during the past 2 months as Facebook and Instagram continue to knock off the disappearing photo app's features, according to an analyst report. The app's downloads are down 22% year over year for the first 2 months of this year's second quarter. Now, do you know who @PhillyD is, Stafford?
Yeah, Billy DeFranco, of course.
So he tweeted out yesterday, Snapchat background data usage just cost me $700 plus in overage fees last month. Holy crap. He didn't say crap. And deleted. What changed? And he posted his the graphics in here. Look at his Snapchat background data usage. 55.04 gigabytes. He's a really big YouTuber. I don't know if you want to comment more on that, Stafford. You know way more about him than me.
I have no clue who he is.
Yeah, I subscribe to him. He's good. Talks about news and topical things like that.
No, but it was fascinating that he tweeted and deleted, and a whole bunch of other people are, deleting too. I'm just throwing that in there because if people are starting to, if Snap, as you said, hit critical mass, now people aren't downloading it more. Instagram and Facebook are taking market share possibly from it, and then you have major people going, the data usage in my background with Snapchat's costing me hundreds of dollars, and I'm done.
Yeah, we're at peak Snap.
That's not a good sign for Snapchat. Since we have talked a fair amount about Snapchat and we have not been terribly positive on it, it's going to be approaching right now 1811. Its lows from after earnings were 1759. Bunch of the firms tried to talk it up. They got a couple-week rally out of it, and now it's rotated back down.
He deleted Snapchat. I love it.
Now, speaking of something that's dropping or has dropped pretty substantially this week, do you have an update on crude for us, Bob?
I do. There's a lot going on behind the scenes in crude, so you might want to time me on this one, Michael. As you listed so conscientiously in the show notes, API and EIA diverged. I don't pay as much attention to API, to be honest, because it's not the official. It's the American Petroleum Institute, who could have an agenda, but whatever. API showed down 4.62 million barrels in a draw in crude oil, and plus 4 million in gasoline. We'll leave distillates out for now. The Energy Information Administration showed a 3.295 million barrel build versus an expectation of a drop of almost 3.5 million. Gasoline also had a build in the EIA figure. So in the two, they both had gasoline builds. Now, part of this build, this is another thing similar to the credit card defaults, where this may not be a trend. We may not have the trend of draws reversing. What we have right now is refinery runs being very high. And what that means is refineries are working almost at full capacity to process the crude oil that they bring out of Cushing and out of storage into gasoline and distillates. When they're running that high and they don't have buyers of the end product, so it's important to notice that gasoline built both in the American Petroleum Institute's report and the Energy Information Administration's report. You had gasoline build in both. So when you have refineries running at almost full capacity, producing gasoline that no one is buying or not buying enough of, they have to slow down and they can't draw because they simply they have nowhere to put it. So their production, if we see their production slow, the refinery runs, the percentage of production or of usage of the refineries in next week's numbers, then you could attribute a lot of the crude oil build to that, not all of it. Saudi Arabia, as part of their plan to push prices a little bit higher, reduced the number of barrels that they were exporting to the U.S. Well, the U.S. actually replaced it with Iraqi oil. The first week of June is the first time ever that Iraqi imports into the U.S. were higher than Saudi Arabia's. So that also contributes to the build, because Saudi Arabia was trying to cut back our inventories by doing what I just said, and we instead replaced it with Iraqi oil. So what's happening is a lot of people are taking advantage of the lower prices right now, not necessarily sure they're going to continue, and the crude oil curve still shows higher prices in the futures. When you look out every month on the CME Group's futures curve for crude oil, it still shows higher prices going out to December and then a fall in prices in January. That's not predictive of front month prices, just for the record. So OPEC is failing again. So it clearly seems to me to be a demand story on the gasoline side, and whether this is a function of less driving that's permanent or just some sort of strange anomaly in the summer driving season, we don't know yet. But we have to look at it, whether it's going to be a trend or not. In the meantime, we're still way above the 5-year average of storage for crude oil in the U.S. Oh, one more thing. The Russia cut that they agreed to, they extended out their agreement with OPEC for the production cuts. What people don't know about the 300,000 barrels that Russia did cut in the previous 5-6 months, it was almost exclusively Siberian crude oil, which is one of their highest cost basis of the crude oil that they pump. So it was easy for them to turn those off. And also, they struggle with that production during bad weather anyway. The weather's starting to turn. So the speculation amongst people that I talk to that Russia will not honor it for the next 9 months. They will start to cheat because they have a limited window to produce full out in their Siberian oil wells. But if prices continue to go lower, then they will comply because it won't be that profitable for them anyway.
Just wanted to say, and we'll be updating this week on our path chats. If we get a close below 45, where we have a key gain level, and it will be on a very long-term trend line, we could actually see crude trading back into a clear path move, which would target the defining point of that trend line of 43.76. So there's a potential short trade in crude. Just want to touch base on that.
Yep.
Now, the WWDC, we sat through the whole thing, Stafford.
Yeah.
We sat through. All right, so we have For the
record, I no longer watch it. I don't watch it anymore. Those shows are not entertaining to me, and they're not good. And I end up getting offended by the politics of the company now. It
sounds like a sales presentation, though. You were right. I was hoping to hear stuff about Swift and Xcode and and the new machines, because developers use new machines. So now they've essentially canned the trash can, right?
Trash and Tosh?
Yeah.
It's 3 years ago. Well, they haven't updated it since it's come out.
The one that looked like the trash can that sits on your desk, and everybody says, well, was it modular and everything else? So they did not do that. They came out with a new iMac Pro, which again is not modular, and the starting price of their new iMac Pro is $4,999.
Starting price.
Starting.
So that's the one geared towards graphics professionals and other things, but that's the starting price, and it's expected to go up to $12,000, I think. So I'm wondering how that's, again, it's not modular. So if you want to change out things, it's not modular, though they say they're still working on another option that's coming later, so we'll have to see about that. Now, they did release, I figured out, because they built that whole factory in Texas, to build the trash cans. And I guess they had to do something with it, so they came out with a speaker that looks like a trash can. That is going to be $349, and it's actually, I've been reading the reviews on it. It's supposed to sound really like a really good speaker, but it's going to compete with the Amazon Echo and the Google Home thing. Although at this point, for that price, you could buy both a Google Home and an Amazon Echo and still be less than the cost of their new speaker. And Siri is leaps and bounds behind both of their things. So that was interesting. Their big announcement was, what was that called? The HomePod?
Well, to give you a little bit of a background on this, there were a lot of MP3 players that were out in the market before Apple found a way to put this new miniature hard drive from Toshiba into like a deck of cards, and that became 1,000 songs in your pocket. And in 3-4 years, Apple owned the MP3 player market with the iPod. Now, I just don't think that Amazon or Google are going to let go of their home speaker products. So I'm worried that this HomePod will just be an also-ran.
We shall see. They updated their notebooks, the ones that came out with that.
They got speed bumped.
Yeah, they updated the graphics and the processor They are releasing a new iPad Pro. Did I miss anything?
Is that one $8,000? What is that?
No, they're going to a 10.5. The screen footprint on the smaller one is going from 9.7 to 10.5 inches, and then they're keeping the 12.
The nice thing about the iPad Pro is it has big bezels. So when you're carrying it around and you're eating a sandwich, you're not touching the screen, like moving stuff around. And so if I have an iPad, I like the bezels so my thumb, I can one-hand it and walk around the house eating a sandwich. Yeah, that's a problem.
So you don't like the new thinner bezels on the 10.5 inch?
Have you tried to reach into your pocket while your phone is like playing a movie and you're listening to your headphones and you end up stopping it or pressing it or moving it and stuff?
Yes.
Yeah, it happens all the time. So bezel.
Every time I do like squats or leg press with my phone in my pocket, it's like listening to me changing stations on a radio. It just always advances, rewinds, forward, hits a YouTube video. I'm like, stop it.
Yeah, I'm on the bezel bandwagon, unfortunately, and I think I'm losing ground.
Yeah, I think you're losing ground. I definitely think you're losing ground. Now, in sort of cool tech news, I don't know if this is going to be great, but it's something I've wanted for years, and Intel announced it this week, the Intel's compute card could transform the world of smart devices. So this is, how your processors and your memory and everything else, it's not really easy to change, whether it's your laptop or even now in TVs or as they're even in refrigerators. But Intel's, they're putting their processors, their memory and everything into this small little compute card that you can potentially, laptop manufacturers are going to possibly adopt this and other devices where if you want to upgrade, like let's say your screen and everything is fine still on your laptop, but you want the latest processor with memory or whatever, you can pull out the little card and put in the new one, and it just is upgrading to the latest processor and everything else. I wish it was, there were more things that I could swap out easily as opposed to when I need to replace the hard drive in my iMac, peeling apart the screen, which Intel didn't talk about it last week, but it will probably give another entry into it. It did trigger a trend line trade last week on a daily basis, and maybe I'll put up something this weekend for the Path chat with it. When it closed at 36.12, it closed above a trend line. This has given multiple entries. Right now it's trading 36.31. It probably can pull back even to the bottom of the rotation zone, which will give possibly proper reward to risk. The full target on that, just so people know, is 36.98. Potential trade in Intel.
It's on a daily?
Yeah.
Oh, that was a while ago. Okay, I see it now.
You triggered last week.
Yeah, it triggered on May 24th? I gotcha.
Yep.
Gotcha.
So
yeah, multiple entries. Nice.
But it's still
been up.
Entry.
Yeah, it's been like there's been multiple entries, and the move ever since the close above the trend line has been a slight up channel, so it's kind of nice.
And you now have the rising rotation zone, so this could still be entered on any of these pullbacks. So or if you're looking to do something, add and then reduce in Intel, those are your targets for it. Mm-hmm. We talked about Qualcomm that did not trigger the double. This is the Intel and Qualcomm tie-in. This just came across this morning. Intel's not very happy about Qualcomm-powered Windows 10 PCs. I guess Intel carefully protects its x86, which is their processor architecture, which is now 40 years old. Wow. Do you realize that? 40 years ago, the 8086 chip, nearly 40 years ago, came out.
Yeah, but the 64-bit extensions were done by AMD, and you got to give them credit.
Well, what's interesting is Microsoft and Qualcomm, they want to start using these Qualcomm chips, their Windows 10 stuff, but it actually has to do emulation in some way of the x86 architecture, which Intel's been able to squash over the years. And now, Qualcomm and Microsoft think they have a way around it, but Intel's already saying, we're firing up our legal team should you go down this path. But that's very interesting with both Intel and Qualcomm and Microsoft going into that and trying to use the Qualcomm chips in their new Windows 10 strategy.
That'll be interesting. It's not like Qualcomm is poor.
Yeah.
And I don't think to see how long they take that fight.
I don't think they blindly are going into this. Intel's already squashed other competitors who have tried to do this. So
yeah, there's precedent that they can look at.
Yes.
They want real Windows on the Qualcomm chips.
Okay. In our food and fashion Nook segment, tie in, because aren't we getting to what anniversary is it of Ferris Bueller's Day Off?
That's a good question.
This is the 20th. Is this the 20th or 30th? 30th.
What, Ferris Bueller?
Yeah, when did that come out?
1986.
Oh. Was it released in 86? Well, the Domino's Pizza, which they've had have you seen their latest ads? They're sort of...
I haven't seen them, but I've heard about them.
They've tied back in the whole Ferris Bueller thing and the whole Domino's Pizza, their tech thing where you can track your pizza essentially from the moment you order it whether you order it via Twitter, your phone. I don't know if you can order it yet via Snapchat, but you can order your pizza like in 100 different ways, which is pretty interesting. So Domino's Pizza and Facebook in this case, they are showing Ferris Bueller's Day Off on Facebook Live this June 11th at 7 o'clock. So if you listen to the podcast and you're a Ferris Bueller fan, they're doing a whole tie-in with what Domino's is going. We're finally getting a nice pullback in Domino's. Can you hold on 1 second?
Yeah. What did that sound like? A shower or a bulldozer?
It sounded like going down bad, man. It's going down real bad over there right now. He muted. We don't ever see that.
that pause with them, and then it was Ferris Bueller Domino. Can you hold on a second?
It's like a river of poop is going through his living room. Something burst. So here's the thing.
Imagine one of the dudes on his hind legs doing the dishes. And Mike just, Charlotte, can you please just stop with the dishes for now? I'm recording.
So, but Apple did something they never did. You know, when Steve ran Apple, you didn't know anything about a computer until, boom, here it is. We got them in the warehouse. You can buy it today.
All right. Back.
So it's called the Osborne effect. When, the Osborne effect is the Osborne Computer Company talked about a computer that would come out 6 months or a year later, and then nobody bought any of their machines, and they ran out of money and went bankrupt. Now, I don't see that happening with Apple, but it's very weird that they have announced this iMac Pro, but it's not coming out till 2018.
They seem to have these schedules. They seem to have this pressure to announce things.
Well, a lot of people are leaving. Professionals are leaving Apple because they don't make what we want.
And going back to Microsoft?
No, usually making a Hackintosh or just using the old machines. You know, like my machines are not brand new, but they're just as fast because they're modular, and I have upgraded them. So,
well, actually, Microsoft is stealing some of the market share with. That's why they came out with their whole new line of their high-powered computers geared towards graphic professionals too. So they are trying to make some inroads against Apple. So,
well, I'm an audio-video guy, right? And so for me, I actually use Apple's audio software and video software, and I'm fine with that. But yeah, I'm a very small subsection of people who will never leave Apple. I will just use older machines that I can hot rod up to be faster than newer machines.
So there you go. That's the Osborne effect, and I like the Osborne. Was that the Osborne computer?
Yeah, one of my.
I like how the drives take up. The monitor's tiny, and
we made like things for Starfleet battles and printouts and stuff. I spent many hours in front of an Osborne.
Speaking of Starfleet battles, can we touch on Elon?
And that was a good tie-in, Mike.
Well, here we talked about their stock earlier. This just came out from a zero hedge with today's 1% rise to a new record high. Tesla just became the fourth largest by market cap automaker in the world, surpassing BMW at over $61 billion.
Insanity.
So now it's ranked fourth. It's only behind Toyota, Daimler, Chrysler, and Volkswagen. Then I put up their latest chart from Zero Hedge on market cap per car sold in 2016.
That's ridiculous.
What are they going to do?
Huh?
What are they going to do when Mercedes and BMW make better, cheaper, more reliable, prettier electric cars, which is coming? What does anyone think they're going to do?
You know what? I think their only hope is what Honda did. You know, Honda at one point saw their market share dropping, so they said, you know, we're going to sell our engines to anyone who wants to buy them, and that really helped them get through a difficult time. And maybe if Tesla can license their motors,
I'll tell you that. What's the flagship? The Model what? Because I paid a little attention to them.
That's the Model S.
All right, that thing is starting to look dated already.
Yes.
Yeah.
It really is. Like, you see it driving around, and it's like, the first time I saw it, I was like, oh, it's a pretty car. I mean, are they doing a redesign yet?
Not that I've heard. Now, this is a tie-in, though. We can actually tie this in because Tesla, they had their shareholders meeting this week, and Elon Musk, the photos in there, gave a tease of the Model Y, which is, this ties into the Model X. It would have been better to just design an SUV the way an SUV should be designed, he said. This is a direct quote. Design a sedan the way a sedan should be designed. Otherwise, you would just try to shoehorn something that doesn't make sense. So I guess the Model Y is going to actually be based on a separate platform, like a true SUV platform, instead of the Model X, which was shoehorned on the Model S platform. But this Model Y isn't coming out till 2019. Mm-hmm. And people, the big thing over on the internet and everything was, look, it doesn't have rear view mirrors, or side view mirrors, sorry. That was what everybody's takeaway from.
It's like the iMac Pro. Look how great it is, and you can't get it. It doesn't exist. It's vaporware.
Can I tell you that I put in MERC into Google? The very first thing that popped up, Mercedes-Benz fully electric. Was the very first thing that popped up, the B-Class that they're doing. This B-Class Mercedes is ugly. I'll give them that. Definitely an ugly little car. But I'll bet you it's going to be 10 times the car that a Tesla is. I'm not trying to knock Tesla. When I first saw them, I thought they were cool and everything, but they're starting to look dated, and I see the stock price, it turns me off the car. It shouldn't be a thing for me, but it is.
It's our modern-day Lincoln Town car.
Well, he also, in the shareholders meeting this week, he caused quite a kerfuffle, and there's an article in the Wall Street Journal that really took him to task on this one. In response to a question about the company CEO and what Elon does in his time away from work, he responded, quote, "Sometimes go crazy on Twitter, sort of red wine, vintage record player, some Ambien, magic exclamation point. What? Magic happens." Huh?
He should have just said divorce, What do you do in your spare time? I just divorce.
Then they took him because when you take Ambien, which is a very powerful drug for insomniacs, you are not supposed to mix any alcohol on it because it can have drastic consequences and stuff like people are known who do that to sleep drive, get in their car and drive unconsciously, and it does not end up well. So, he got a round of laughter at his the meeting, but the Wall Street Journal and some other people took him to major task for even going there.
Yeah, that's dumb.
Like, dude, don't be joking about mixing Ambien and alcohol, especially as the CEO of it's now Tesla, not Tesla Motors, because we got their
He only does that if he's working on solar panels.
Yes.
The BMW i8 is stunning.
Yeah, that's still around. The other one is not.
Still looking at cars.
The i3 is gone. The i5 is not going to happen. But the
i8 is friggin' stunning.
What does the i8 look like?
Just type. It's beautiful.
BMW i8.
It looks
Diablo from the 90s.
Ooh.
It looks like a cooler M6.
That is sort of good looking.
Yeah, it is stunning. And they got the little blue lights in the front because it's electric.
You could buy that at about the same price as you can buy a loaded Model
X. Loaded Tesla, yeah.
Oh, it's now it's a hybrid between electric and gas.
Yeah, the i8 is, but it's moving toward full electric.
Yeah, see, this is what all these for the electric car market, they're not going to have a monopoly on it anymore.
No, that's the difference, right? This is not Facebook or Google, where the technology was so different that they start out with a monopoly and the stocks just go to 700. They will not have a monopoly. They will be going against 100-year-old car companies that they'll have a head start on, but these guys are used to catching because their cars are fast. I don't know, it's just whatever. We spend enough time on Tesla.
We have to do our Tesla updates. Since everybody's buying Tesla stock, it seems, so we can't ignore it. I have another rant.
Uh-oh.
We're at cryptocurrencies. I can't even call Bitcoin a currency anymore because if it does not trade like a currency, and it's not. I wouldn't use it for a stable exchange of media. It trades like a speculative vehicle now. I mean, if you were going to use this as actually something to, hey, I'm going to Europe and I'm going to put some money in my Bitcoin account and I'll pull it out while I'm in Europe and I'll spend it over there. Would you want it fluctuating 10, 15% in a day? I sure wouldn't. You know, you put it in, it's a 3,000, you get over there, it's a 2,500. What?
Yeah.
No, it's gone insane, but I have a tie-in. This is where I'm getting concerned. Jim, listen, there's millennials now. They're all into trading this stuff.
Yes, they are.
And yeah.
And they're actually, I'm not paying my student loan because I'm putting it into Bitcoin, Ethereum. Look, I doubled my money in a week. I did this in a week. They're putting it into, there's now over 750 cryptocurrencies out there. And it's getting insane. They're like avoiding paying their debts to trade because then they're using the money they're trading to, well, look, I can make all this money and then it'll help me pay off my debt faster. Oh, no. That's not good.
Well, it's their generation's thing. I know I'm sounding like an ageist, but it is their generation's thing, and they're gonna do it.
But
yeah, I was talking to a guy who's a friend and client. And he called me up this week and he said, look, I'm getting ready to sell my company. I'm going to want your help with what I should do, blah, 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 with the money. And we've been having multiple conversations this week. And at one point, just out of curiosity, I said to him, do you know about cryptocurrencies? He said, yeah, my 20-year-old son and his friends trade it all day long. They make about $400 a week each doing it. I'm like, there you go. There you have it. They all have full-time jobs like at coffee shops and stuff. But they trade cryptocurrencies on the side. They make about $400 a week each, he said, trading it. That reminds me of 99, Mike.
Well, I'm seeing 99 reminded with now the people who are piling into the FANG Tesla stuff are now old. I mean, they're my age and older, you know. Late 40s, early 50s, and then so they're all going down that path, and now the millennials all going down the cryptocurrency. Let's not treat it like a currency. Let's just trade it.
I am actually going to change my why today. My why was going to be one thing, but I'm going to change it based on our conversation at the beginning of the show about the Fangophiles. I just got a note from somebody that I follow, or somebody that we exchange information about what Goldman thinks about the mispricing of the FANG stocks. And they actually titled the article, Mispriced FANG Warns of Fangmageddon. So Goldman is sort of indirectly predicting a massive FANG fallout. Let me just read the first price of this. First line of this. Goldman has some bad news for a market that's depending on a handful of stocks for an outside percentage of year-to-date returns. Referencing the FANGs. Back to crypto.
I got to tie in also for the people who are trying, because remember we talked about they tried to get coin. Who were the brothers? The
Winklevoss twins.
Winklevoss, yes. Now they tried to get coin approved by the SEC, which was put on hold. They're re-looking at it. So a lot of people have been trading this Bitcoin Investment Trust, GBTC. Call up a chart of GBTC, Bob.
All righty.
And I'm going to give people a very big warning on this one.
Whoa.
Here's the problem. GBTC it's an open-ended trust. It's the first publicly traded Bitcoin investment vehicle. Do you know what net asset value is?
Do I? Sure.
Yes. Can you explain to people what net asset value is?
People will see this all the time, and they don't know what it means. There's an abbreviation of NAV, okay, which means net asset value. So essentially, it's a value per share of a fund or a vehicle at a specific date and time. So it's not like the total assets under management or any of that. It's the value of one particular share of, let's say, GBTC at a particular point in time.
Now, GBTC, since it's not a direct, they don't go to the marketplace, and a lot of these ETFs that are closed end, they have to, as they get more people in them, they have to go buy the physical assets. This is not necessarily buying the same amount of Bitcoin. It's ranged from 0% to 142% of net asset value with an average of 40% since May 2015. This is very, very risky.
And this is an open-ended fund.
Yes.
So net asset value matters for an open-ended fund.
Yes. This is trading at such a premium even over Bitcoin right now that if it were to return to its net asset value, you could, right now it's trading 490. It's been at a high of 565. This could easily return to 300 if it were to get back to its net asset value and with no change in Bitcoin price.
Right.
So be very careful. This is not really tracking accurately the value of Bitcoin because it gets so out of whack with its net asset value. I would recommend people steer very, very clear of this. If you're looking to trade Bitcoin via, your brokerage account, it's not there yet. You're better to figure out how to trade a cryptocurrency or until if coin does get approved by the SEC, which will be then a hopefully properly tracking fund, then you can do that. But until that happens, be very aware of what you're trading. I keep hearing people talking about trading just GBTC like it properly tracks Bitcoin, and it does not. That's our public service for this week.
When you look at an open-ended fund, there's times during the life of an open-ended fund where you think you have money, but you can't get it out.
Right.
You simply can't get it. It looks like in your account that because of net asset value, it looks like your account is at one value. And when you go to get that money, you cannot.
Yes. So very careful in this cryptocurrency world. Now, tying in, Kramer this week says it's possible Bitcoin could reach 1 million.
What?
Yes, he was actually, you should look this up. He was going on his Kramer speech. Everybody's going to need Bitcoin because of these cyber threats. He was talking about these cyber threats having help desks and everything else, but everybody's buying Bitcoin now. It's going to go to 1 million. He was actually referring to a recent comment by Business Insider CEO Henry Blodgett, who said Bitcoin could go to 1 million. However, I also put in the link to Kramer, but Henry Blodgett said Bitcoin could go to 1 million or fall to 0.
Yeah, bingo.
Because there's no intrinsic value in it. It's only a mechanism of what people are willing to exchange it for at any given point in time. So Kramer sort of left out the go to 0 part and hyped up the it's going to 1 million part.
I mean, this is like a science fiction thing, but if there's a big EMP from space aliens on our planet, you're gonna want the money in my mattress.
I mean, look, sometimes I watch Kramer just because I have it on. I don't think he even watches the markets anymore. I really don't. I truly don't. They have him on that morning show sometimes. Well, not sometimes, all the time, the opening bell thing. And you'll hear him go off in a direction. It's insane. They'll say something like, so Jim, Apple today, the Worldwide Developers Conference, he's like, oh yeah, Apple, Steve Jobs, great CEO. It's like, he's dead, Jim. And then we're going, yeah, but I mean, Michael Voss of the Michael Kors Company, great bags. My wife's got the bag. We were at the bed and breakfast the other day, and she put down the bag. I was like, that's a great bag. And then we had a great wine. The wine poured into the bag, didn't even spill the bag. I was like, what? What does it have to do with Tim Cook? What are you talking about? He goes off on these things. It's like, what? And then, just like you said, Mike, he saw that Blodgett said 1 million. He didn't even talk about the story. He didn't even say that this was Henry Blodgett saying that Bitcoin is so volatile that it could be at 1 million one day and 0 another. Go to 1 million. It's 1 million. If it's 1 million, then that's more than 100,000. 100,000 years ago, there was a dinosaurs running around. Did you see they just found a 30,000-year-old skull? It's like, what the hell are you talking about?
They should have you on with. That would be priceless. I would pay.
Wear a bald cap, right?
My Kramer. Where he does this stuff, and then he does an uncomfortable, I'm laughing at my own joke face.
Yes. Well, this morning he was on the morning show talking about, the Peloton spin bike with the other co-hosts. They were talking about, the indoor spin bike back and forth. It was just, he went off on that rant.
I think sometimes when we go into pantsless chaps in the podcast, I worry we're becoming Jim Cramer. Never mind.
Yeah, but we do it sort of tongue in cheek.
It's definitely tongue in cheek, but like it's a trigger for me because I don't want to become Cramer.
Well, that's why
you will never. You're too intelligent and smart and funny. You're Kramer, mentally illness.
And
the guy says that he doesn't even realize that, like, Bitcoin's the first. There's 740 cryptocurrencies right now. Right now. We don't know 10 years which one's going to play out. And the speculative point is a massive point that you're making, Michael. It's not a currency when it's trading that speculatively. It's just not.
No, and if I was actually going to use another one as sort of a store of wealth, you know what, I want something that I could go anywhere and get it out anywhere, I would not be choosing Bitcoin at this point because it's so unstable.
Right. I mean, you buy Bitcoin at 1,600, it goes to 1,700, take your profits out and you put it in a currency that you know isn't going to move that much.
Yeah.
And then you trade it again later. It's now the vehicle to create wealth in another stable currency. And I don't think that was the point in the first place, but that's what's happening.
Well, then we had Mark Cuban this week come out on his Twitter rant with, I have his tweets from his view on Bitcoin. I think it's in a bubble. I just don't know when or how much it corrects. When everyone is bragging about how easy they are making money equals bubble. Anyone anywhere can buy stock. Crypto is like gold, more religion than an asset, except, of course, gold makes nice jewelry. Crypto, not so much. And this is what we've touched on. I think blockchain is very valuable and will be at the core of most transactions in the future. Healthcare, finance, etc. will all use it, which we've talked about. The blockchain is amazing. That's the best part of some of this crypto part. He started a firestorm where people went after him like...
Cuban?
Huh? Yeah,
Mark
people.
Cuban, they went after him.
The millennials. Well, you don't know. You're an idiot. You're just you're a washed up idiot.
Well,
blah blah blah.
I do agree with some of those sentiments.
No, no, but it's funny because everybody. You know how gold bugs always defend gold. Like you gotta own gold. You gotta bury it in your backyard. It's going to 1 million. Well, people are like, look. Bitcoin, it's the best thing ever. It's going to 1 million. You don't know what you're talking about. It's not a bubble. We trade this. We make all this money and blah, blah, blah. You should follow these Twitter rants that people got unhinged. Like he's
triggered. They were triggered.
Yes, it was. You should die. You criticize Bitcoin.
Trigger warning.
It was fascinating. I'm like, okay, this is getting really sort of weird. The Bitcoin thing right now. So we're going to keep talking about it, Bob, and you're tuning into it.
I'm tuning in now because, once I found out there were 740 cryptocurrencies, I'm realizing that it's not going to be Bitcoin. It's not going to be Ethereum. There's something else out there that's going to be better and unassailable down the road. It's not going to be these two, especially when you see the moves. It might be Ethereum, it might be based off of one of their technologies, but there's something out there that no one's talking about yet. It's probably one of the ones that's worth a fraction of a cent. But it's just not. It's not going to be either one of these. I agree with Cuban. The only thing is that I hate when people say that gold is a religion. Gold has been valued by humans for thousands of years. So for people, we look for things with a track record, do we not?
Yes.
Gold has held value since ancient Egypt. Okay, so when people say that gold is religion, I understand what he's saying. He's saying there's people out there that say just buy gold and nothing else. That's as crazy as just buy Bitcoin and nothing else. But when they talk about gold being religion, gold is an asset. Why? Because people assign value to it, period.
But it is also on every motherboard of every computer these days somewhere, so it does have
physical gold.
Yeah, well, you have to use, gold alloys in order to get, good connectivity and have it be malleable.
Silver.
Yeah, silver, exactly. So these metals, of course, they have their industrial applications.
Can I put my Bitcoin on every motherboard?
I look at it like this. There's a price to a pizza, right? Pizza costs anywhere from $3 to $20, depending on where you're buying the pizza. Pizza has no value except that it tastes good. Why does pizza have price, or why does somebody pay money for a pizza? Because they like it. Gold is the same thing. Whenever I used to hear Warren Buffett say, gold doesn't produce a profit. Of course not. Gold is the product. People want gold the same way they want a pizza. And they assign a value to it, and that's not going away.
Well, there you go. Bob's Gold Pizza rant.
Why is gold like pizza? That's going to be on Twitter this week, I bet.
It'll definitely be in our newsletter next week.
Anything, at the end of the day, anything people assign a value to holds that value, period. That's
Until
it.
you eat the pizza.
Then you order another one. Pizza's amazing. Pizza's friggin' amazing.
Because we haven't touched yet on the election results, which are sort of big.
Yeah. The election results are interesting. It was a complete nightmare for the conservatives. Well, not a complete nightmare, but essentially Theresa May probably screwed up. Now, she got more votes as prime minister than the previous conservative prime minister, who was David Cameron, who was the prior one. But she lost 15 seats in parliament, and with it, she lost her simple majority. Now, she's going to play it off as conservative prime minister went from 38% of the vote to 42% of the vote. So the public supports her. That's true. But we've now ended up in a hung parliament, hence the 2.6 fall in the sterling overnight, the 2.6% from high to low. Now, at the depths of that fall, it was when it looked like, because it briefly did look like Jeremy Corbyn might actually win the prime ministership, Jeremy Corbyn being from the Labour Party. But then it turned around as more and more numbers came in, and she, again, essentially won with more votes than David Cameron got, or a higher percentage of the vote. But she now does not have the power in Parliament that she had before to push a hard Brexit. So this is being viewed as a vote for a soft Brexit, but not an abandonment of the Brexit, because both parties voted for the Brexit, and the Labour Party and the Conservative Party still won 80% of the seats. So it's a little bit of it's quite a big loss for her. It's quite a big loss for Theresa May.
It was looking like she was trying to support a form of government with the support of the DUP party.
Mm-hmm. Yeah, they don't like her.
Huh?
They don't like her.
Well, that's what's been all over everything this morning, that because they have enough seats to give, they partner up on some stuff. They give her a majority, so
yeah, they give her back the majority she already had. You know, that's where this is being viewed as a screw up. The Conservatives had 350 or 360 some odd seats before. Here, I got the exact number. From 331 down to 316. So that's complete failure for her. Anyway,
well,
I mean, Labour made more gains than she did. Labour gained 31 seats. I'm sorry, 36 seats. And she lost. So Labour really made huge gains in this, in Parliament.
We also had the ECB out this week with Draghi.
Draghi said we need to be patient, again, because he's not seeing inflation, right? So there was the only hint that they might be changing policy is they, I guess the whole ECB did it. They removed the language that said that further quantitative easing might be needed, or further rate cuts might be needed. They removed that language, but he did in the Q&A say we need patient because inflation is not where it needs to be.
Yeah, they did big cuts to their inflation targets. Like this year, inflation coming in at 1.5 versus 1.7. Next year coming at 1.3 versus 1.6. They also upgraded their GDP forecast this year coming in at 1.9 versus 1.8.
Mm-hmm.
Risk to outlook are broadly balanced. The ECB will be in the market for a very long time. I like these two. They're ready to increase purchases in size and their duration. But then he said, they didn't discuss normalization, but two members made observations on normalization. And then their balance sheet's looking quite interesting.
Yeah, it's huge.
Yeah, it's huge.
It's huge.
Well, with GDP in Japan, they missed. GDP Q1 came in at 0.3, expecting 0.6, and annualized 1.0 versus expectations of 2.4. So that was a pretty big miss in Japan with their Q1.
And they scared the market with some comments about starting to discuss how to remove accommodation. And it was like, really? You guys are going to remove? Draghi's not even ready to remove accommodation. You've been in a 30-year recession.
Exactly. I just had to we skipped over U.S. economy, but we had a number of some misses this week. Market services PMI missed 53.6, still above that 50 level though, expected 54. Although it did expand from the last 53.1. Non-manufacturing ISM came in at 56.9, expected 57, last 57.5, so that's down. Factory orders down -2% or 0.2%, expectations down -0.2%, so that hit last to 0.5%. Goldman also cut the Q2 GDP estimate to 2.4 from 2.5. Initial claims were up slightly, 245 versus expectations of 240. And then this morning, wholesale inventories, which is going to cause another cut in Q2 GDP, came in at -0.5% versus expectations of 0.3%. And on that news, do you have time to do your why?
I do. Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com. So this is going to be kind of a direct message to some of the people that Mike was talking about. You can leave that part in or not. It's up to you. About the reliance upon certain stocks, the FANG stocks, and I don't even remember the other ones. I know one of them was Tesla. Mike, what were the other ones? It was Facebook, Amazon, Apple, Netflix, Google, Tesla, and who else?
NVIDIA. Yeah, they bumped that one in now, too.
Jesus. Anything that has momentum, right?
Look at anything that's charts. Look at all the charts. Look at the NVIDIA's charts. It's gone vertical.
So, again, if you guys are listening to this podcast, why don't you look at FireEye? That's one of those, too. I mean, look, this is what Goldman Sachs and what's that, FireEye? FEYE.
There it is. Yeah, FireEye. Sorry.
That's okay. No, put whatever you want in there.
FireEye might just be an interesting play. I got to keep an eye on this because it could break out of a horizontal channel at some point. So there could be a trade here.
And you know when they will, Mikey? The next time we hear about a cyber attack. Every time there's a cyber attack, FireEye moves. So just as we were talking about this during the podcast, I received a message from a guy that I talked to, and he sent me a Goldman piece. Now, this is Goldman Sachs, right? Smartest guys on the street, or the ones with the best insider information, whichever way you want to post it. Goldman has some bad news for a market that's dependent on a handful of stocks for an outsized percentage of year-to-date returns. Here's the shocking headline: is FANG mispriced? Now, here's a little bit from the piece that I picked out while Mike was talking. The unintended consequence of outperformance. And this goes to something that Mike and I talk about a lot, where you cannot exercise risk from reward. They're inseparable, right? Especially if you're using leverage to do this kind of thing. While FANG has dominated investor focus, the nature of the acronym has expanded more broadly to encompass mega cap tech. Think Tesla. Indeed, the bigger story is, in our view, Facebook, Amazon, Apple, Microsoft, and Alphabet, a group of 5 stocks, which has been the key drivers of both the S&P and NASDAQ returns year to date. This outperformance, driven by secular growth and the death of the reflation narrative, has created positioning extremes, factor crowding, and difficult to decipher risk narratives. I'm going to shoot down to the bottom here just to kind of give the cap on this. Essentially, what they're saying is that there's positions in these stocks, both in the hedge fund world and in the individual world, that if there is one little blip in what they're doing, whether it be the sector, whether it be a source of financing, whether a lot of this buying is waiting for repatriation to be allowed at a lower tax rate, whatever it is, if there's a blip in any of these things, not only will they go down, but they will go down on a factor of 4 or 5, because of the amount of longs there are in these stocks. And when you add in leverage and you add in the pain that will be felt in the NASDAQ specifically on this, whoever is doing this, I hope you have the money to make your margin calls, because it won't just be an 8% fall for you. It will be a 24% fall. It will be a 25% fall, even a 30% fall because of the leverage. If you want to see what that looks like, go look at like a Brazil leveraged real fund or any of the emerging market funds. When you're trading a specific set of stocks at a 4 times leverage and layering in the index that represents those stocks, it's like you're trading an emerging market, which defeats the purpose of trading in the US at all. So enjoy your profits. I'm not predicting it and I'm not wishing it on you. It is our responsibility to tell you what could happen. It is not our responsibility to tell you, I told you so, when it does happen. Be extremely careful about levering things that are running to the upside, because that leverage will smoke you on the downside in a way that you probably have not experienced if you did not trade in the 90s or if you were not involved in Bernie Madoff. That's my why.
And people who are trading their Bitcoin, you can get smoked on that too.
Yeah, it's the same kind of concept. It really is. But the difference with Bitcoin, obviously, is that you're putting the money you have into Bitcoin, and if it goes to zero, you've lost the money you have. No one is knocking on your door looking for your margin call.
Unless you're
what's
trading,
going to happen to these people.
Unless you're trading GBTC in a leveraged margin account.
Right. And we don't have a we don't have a product to sell you on the FANG stocks. We're not trying to get you to do anything with us. We're just very concerned that you can still afford to bump into Mike at barbecues.
And because if you, let's say you have 100,000, you're leveraged to 400,000, we get a 25% correction in these stocks you're trading, that wipes out the 100,000. That wipes out your base.
Right.
And before you even get to that 25% correction, you're going to get a lot of margin calls. And if we start seeing margin calls in all these momentum stocks, it feeds on each other. That's what you see.
If you want to see what it looks like when people in a position get panicked out of it, look at some of the big crude oil moves lately. They happen in days, sometimes in weeks, and they eventually recover, but not before all these people are wiped out of their positions.
Yeah. It's pretty, it can happen fast and drastically. I mean, go back to Qualcomm in 2000.
Let me take a look.
Look at it on a weekly chart.
I'm sorry, it's down at the bottom on my list. Here, I have to scroll. Oh, there you go.
You know, that... How long did that take to fall? Because it was trading 100. It went vertical, right?
Go ahead. I'm sorry.
So, 2 weeks later, it paused. It dropped another week, rallied back up to highs of around 80. Then the following week was down to lows of 52.81, almost 50% down from its highs in a matter of 4 weeks.
It lost almost 50% of its value from 2014 to 2016. Now, granted, that's a 2-year period, okay? But if you decide that, okay, well, you know what, it's going to come back, I'm just going to keep reinvesting. It lost 50% recently, let alone what happened in 2000. That's the speed that it happened. Now, granted, 2000, terrorist attack, whatever. You can make all the excuses you want. Just you have to always consider that you're doing this leveraged. If you were doing this with spare cash, it's fine. You lose your money, you go to work, you make it again. You know, everything's going to be fine. But again, when you look at this thing back in 2000, you know, the Qualcomm's, again, like Mike said, it's a great example. It went from 100 all the way down to a low of 11.
That's when Enron was really melting down.
I mean, it was all like a domino effect from Enron's terrorist attack to, you know,
California going broke, rolling blackouts,
breaking the tech bubble in the late 90s. It was all kinds of stuff.
It's everything.
Well, here's another one. We're not just picking on Qualcomm, just to point out another one. Cisco traded high of 82. 3 weeks later, was closed at, and Cisco's a huge company, remember, 3170. So high of 82 to 3170 in 3 weeks.
So 60% of its value.
60% in 3 weeks gone.
Times 4.
Now, your account's blown out way before that.
Yeah.
It's gone. Now, my what's changed because the trade's not going to, it's pulled back today. It was going to be a possible early trade in Twitter, but it's now dropping. It's not going to get anywhere close to triggering. My what is now just the WTF. The VIX, 937 this morning. So everything's just perfectly complacent. Everything's just going to keep going. Tesla's now bigger than BMW. Everything's perfect, and I don't have any trade calls. I already called the one on Intel earlier.
Those who cannot remember the past are condemned to repeat it.
Doomed to repeat it. Yeah, this is, and again, it can keep going a lot long. I'm not saying it's at the top. Tesla could be at 500 in another couple weeks based off of where it's going. But you know what? At this point, the risks in some of these stocks, especially off this vertical nature, is outweighing the rewards. I see more downside risks than upside. But again, I could be wrong because they can keep going until they don't.
Yeah, anytime something goes
capital.
Yeah, anytime something goes parabolic, there's always more downside risk than upside risk. What again, I'd like to tell these people is at least cut it to 2 to 1 and don't reinvest the money. Or at least don't reinvest all of it. Because there's just a huge risk of something happening and you're going to need that money on the side to make sure they don't come and take your house.
Yeah, once you've had enough bad things happen to you in your life, then you realize, where the edge is and what the risks are. Mm-hmm. And once again, fiscal conservatism.
Before I say goodbye, we have Fed Watch tool, 99.6% probability the Fed hikes rates next week.
Yeah, so it's fully priced in.
Yeah, just about.
Now, with this VIX low, it's the lowest VIX print since 1993.
Mike will have a full VIX report later in the week, which basically is there's no fear. Thanks for the report. Guys, I got to run. This has been Bob Iacchino. Cheers, everyone. Thanks for listening.
And this has been Mike Arnold, and we will talk to you next week.